Hello, welcome to the program. Ahead, we look at the free-to-air TV ratings season for 2011 and the network's market share targets for next year who'll get what they want. The Foxtel Ozstar merger competition decision delayed again, and with outdoor tipped to be one of the fastest growing media sectors over the next few years, we'll be joined by the CEOs of I and O Media. But first, to the news this week that the General Manager of Fairfax Radio's 2UE, Tim McDermott, is returning to FM as DMG Radio's General Manager of Nova 96.9 and Sydney's 95.3 FM. He'd overseen an on-air shake-up at 2UE. Fairfax, of course, decided in late October to hold on to its metro radio assets after failing to get the right price for them. Well, for more on this, we're joined now by our co-host, the editor and publisher of Mediaweek, James Manning. James, great to see you as always. This was quite a shock, wasn't it, Tim McDermott jumping over to DMG? Yeah,
it was. It was a big surprise for all the staff there at the Sydney station this week. We've talked before about how Michael Anderson's sort of a board member of Fairfax, former Austereo chief executive, has sort of been given the job. Fairfax decided to stay in radio, so he's working on a strategic plan for how they can perhaps better integrate radio, move forward. His first meeting with the staff in Sydney was Tuesday morning. The staff went along thinking they were just going to meet Michael, hear a little bit about what he's been up to. But he did brief them on that. Then he had to give them the bad news. Look, your general manager's going. A few audible shocks amongst the staff. None of them saw this coming. Connection with the perhaps the instability that within the company about whether they were or not staying in radio. Tim McDermott got a better offer during this time and thought, look, you know, I'll definitely know what's for me if I take this job. If I stay with Fairfax, you know, will they sell, you know, or not? So he's opted to go.
In radio, of course, it's the end of ratings this week and all the shenanigans that normally go on with the end of survey. Also, of course, we've seen the ongoing issues surrounding Carl Sandilands, more advertisers pulling spots from his breakfast show. I mean, what's the future? Is the break going to come at a very good time for Carl? Yeah,
the break certainly come at the right time for that station, for the company, just to let things settle down, if you like. They've got Andy Lee from Hamish and Andy's coming in to do a summer breakfast show next week for a couple of weeks, so that'll stabilise things. Listening to the show this week, you wouldn't know a lot of advertisers have pulled out. There's some advertisers that you maybe wouldn't normally hear in breakfast, but it still seems to be, you know, reasonably well populated with ads. A few big brand names in there too.
And they were talking about, you know, millions of dollars worth of advertising.
Well, I'm sure, yeah, I'm sure there's been some hurt, but I think it's all quite, you know, quite speculative about just how much it's going to punish the bottom line. But I guess we'll get that eventually in their sort of, when they come around to report on the first half of the new financial year.
But you think Carl will survive?
Well, if I had to say, yeah, I think he probably would, yeah.
Just turning to some other news as well, the Foxtel Ozstar merger competition decision from the ACCC. It's been delayed yet again, but this was at the request of Foxtel.
Yeah, I mean, ACCC originally said, look, we'll have a decision on this on September 8. That date came and went. I think another date might have come and went. Now another delay. So, and lots of speculation. Look, some people saying, look, it's probably a good thing for the deal because it means the deal's still alive. They haven't reached a definitive decision. Other people saying, look, it's not good, you know, because the very early ruling with the ACCC did signal some, you know, concerns early on that it would lessen competition in some areas, wouldn't affect some others. So it did look negative early on. So, but yeah, I think it still could go either way, this one.
Yeah, we've got some interesting thoughts as well from the trader's perspective a little later in the show. Just turning to James Murdoch, obviously the Leveson inquiry ongoing in the UK. He's been re-elected as the chairman of B Sky B, though, in the past week.
Yeah, but not without a bit of a protest vote. I think it was a bit over 20% of the people, or shareholders who could vote, sort of voted against his being reappointed, and he survived an earlier vote of shareholders at the News Corp AGM just last month. So he's managed to get across those two hurdles.
When you're talking about media dynasties as well, we also saw Nick Fairfax quitting the board of the newspaper publisher.
Yeah, last Fairfax family member on the board. It's taken a long time for the company to get off the board, over 150 years. But yeah, so it's going to be, you know, it's a brave new future for them. I think we're going to hear a lot more about their digital strategies, and just this week we've learnt that the Financial Review has sort of upended what they were doing online, which is seen as the future of for these companies, and they're sort of cutting their fees significantly for people who want to read that stuff.
All right, thanks for that, James. Well, with predictions that outdoor is going to be one of the fastest growing media sectors over the next few years, we are seeing forecasts for increasing merger and acquisition activity among Australian outdoor firms. Champ Private Equity undergoing due diligence on oOh!media as it considers a $160 million takeover offer. APN also denying that it's going to sell its outdoor operations, but it is looking at joint ventures to expand the unit. Well, for more on this sector in 2011 and what to expect for next year, we're joined in the studio by Brendan Cook, the CEO of oOh!media, and from our Brisbane studio by Mike Tyquin, CEO of the 10 Networks out-of-home advertising group I. Great to see you both. Thanks so much. Now, Brendan, obviously, I'm guessing you can't say a lot at the moment with the due diligence period underway. What are you telling shareholders, though, about the Champ, considering a bid for oOh!?
Yeah, our statements have been pretty clear to the shareholders. Board is reviewing an offer. Champs have to conclude their DD. They have an exclusive period. At the end of that period, which will be sometime in the next few weeks, the board will make a decision on their firm offer and determine what their recommendation is to the shareholders. And that's about all I can really say at the moment.
But you see it as a sign of a lot of interest in this sector?
Look, I think it's definitely a positive sign for the outdoor sector. I mean, the media market doesn't have a lot of plays in general going on at the moment, and to see a quality private equity fund like Champs, who have some significant funds and significant ownership in significant businesses, looking to invest in the outdoor sector, I think is a clear signal that they are seeing that as one of the traditional mediums, we certainly as an industry have a lot of growth potential over the coming decade.
Mike Tyquin from I. Welcome to the program. Do you agree with what Brendan says? Do you think it's interesting how the interest in the sector is sort of an indication of that the people see as a lot of upside there for you guys?
I think the likes of Brendan and myself would probably share the view that it's not a surprise to us in terms of the underlying confidence that exists in the sector, and that investors outside the sector are now looking very favourably at a number of options and opportunities. It's probably worth noting it's been a big year in media generally in terms of corporate activity, with a number of sort of merger and corporate pieces, significant pieces of activity, and that this has come late in the year for out-of-home is a really positive sign of not just the year or two we've had, but the prospects for the sector going forward.
And Brendan, I wanted to ask you about that too. The second half of the year, traditionally stronger. How has it gone?
Yeah, look, we've certainly seen it not be as strong as the first half. We as a business were up 9.5% at the first half, and we'll be around the 4 or 5% mark at the end of this half. So that's flattened out as advertiser lateness or confidence has been a little bit lighter. But in saying that, if you look back in history, traditionally at outdoor advertising, when the total media sector had softened, outdoor had in fact been slammed. And I think it's actually a reflection of the strength of the medium today that whilst it's softened, there still is growth across the sector in total.
Mike, big is better in outdoor. Big money still in the big giant billboards. But what else is sort of generating revenues?
I think that the billboard component of the sector will always remain strong, James. There's plenty of brands out there that want the brand fame and the broadcast qualities that large format outdoor can provide, but like Brendan's business, our business is very heavily invested in other place-based out-of-home formats in the last 7 or 8 years. In our business's case, it's airports, it's shopping centres, it's universities. They are environments where you can certainly get to consumers in an environmentally, in an audience, and more increasingly in a time-specific context. And advertisers are really seeing the benefits of that, and that's where we're seeing, I guess, in percentage terms, the most significant growth and a lot of interest in the sector in terms of investment as well.
Mike, is it going to be more costly, though, with certainly in terms of the big billboards? I mean, you're going to have to invest more in more high tech and digital displays. Is that what you're predicting down the line?
Yeah, Bridie, we've got a problem in Australia, a challenge around regulation. We certainly are behind the rest of the world, many markets, developed markets, where we have less progressive framework, the regulatory state level particularly, that would allow us to digitise many of our most significant and important and valuable large format roadside assets, but certainly you can see the extensive investment that's going on in airports and shopping centres in particular, and transport systems at the moment, utilising digital display technology. Most companies, I think most of the leading companies at the moment, are taking very substantial positions there, because it is opening up more opportunities for advertisers in that time, audience and environmental context to do things that are frankly more engaging and be able to activate the medium more effectively for advertisers.
Brendan, and something for both of you, I guess, quickly on the... We've seen a bit of cross-selling. I mean, I's done a bit this year with their new product offering across, I think, some TV and radio. Does it hurt you? Do you lose much business because you're not part of a bigger media group, perhaps?
Oh, I don't think so. I think there's a lot of alignment goes on with media agencies in terms of how ideas and media can be brought together. Certainly outdoor and radio is a very positive and strong combination, but we haven't seen any issues from our point of view. But conversely, we do also recommend a lot of programs that integrate other media campaigns. So I think the media agencies in general, that is in reality their job, and they do a pretty good job at working out how to combine media formats to deliver the sort of executions that clients are after.
Mike, is that, you know, when you're looking at those cross-selling opportunities, I mean, is that becoming increasingly important when you're speaking to your clients?
Look, it is, Bridie. It's something, it's still fairly early days for us within the 10 group, but we're quite excited by the prospects and the work that's been done so far. I'll just make the point, somewhat to extend on the points Brendan's made, that it's important, you know, I think for every media format or channel within a cross-platform or integrated opportunity to stand for something in its own right, have its own identity and have its own value. So whether you stand alone or you form part of a cross-platform buy, the roles that those various media channels play need to be recognised and need to be valued. And I think, again, to the earlier comments in this discussion, the emerging role of out-of-home, the value advertisers are placing on it's only helping elevate out-of-home in those cross-platform and integration discussions.
And Mike, if we could get a thought off you about, you know, how's this year ended up for you guys? And have you got, you know, you'll probably say it's hard to read next week, let alone next year, but what can you tell us about what your feeling is?
I'd say overall, James, my observation would be the year's probably ended a little softer than I think all of us in the sector expected. But to put that in context, I agree wholeheartedly with Brendan that in previous downturns or softer markets, out-of-home's fared very, very poorly, and we've held up well. We'll probably finish about 4% up for the year. And when you think about that as a great consolidating result on top of the 19% growth we had last year, the sector will be somewhere in the range of $500 million this year based on the data that's collected and published by the OMA. And that's a great consolidating result and will set us up well next year. I think the early part of next year will be a little short and a little bit soft, but I expect by the back half of next year we'll be returning to, you know, something like higher single-digit run rate growth on an annualised basis.
Brendan, how optimistic are you, and what are the key themes, do you think, for next year?
Oh, look, I think we're very optimistic. The key for us is that if you look at it today, there are pretty well most of the top 100 advertisers are now spending on the outdoor medium and spending more than they've ever done before. And I think that's the great foundation stone for the business going forward. And certainly the advanced sales into next year are positive compared to last year. Like Mike, I think, you know, advertiser confidence, who knows quite what it's going to be in the first quarter of next year. There's so many other world economic issues that can determine that a little bit. But what we're seeing from a medium point of view is certainly that we're on more briefs, that we're having more discussions with clients, and clients are considering spending more money on the medium, and I think that's the positive sign.
Is there anything in particular you put it down to why outdoor is a standout and going forward? And what sorts of things do you think could be behind it? Do you think perhaps that the introduction of Move may have had something to do with that, Brendan?
Certainly, firstly, I think as a medium we haven't got audience decline. And in terms of traditional media, that's a pretty good position to be in. You then bring in confidence in the sector, and Move has certainly been a great leveller for us in allowing major advertisers to see that the industry had the wherewithal to invest significantly in research and to support the results that we're already delivering. And I think we'll see Move deliver greater opportunities for us as the years go by. Today that's been a great leveller in allowing us to be seen as very professional. And of course, moving forward, I think smartphones and the engagement with consumers that consumers can have will be a big factor in driving a lot of advertisers to the way they can use the medium very differently to the way they've been traditionally using it.
It's been great to talk to you both today. Thank you so much. Brendan Cook from O Media and Mike Teichman from I.
Thank you.
Stay with us. Coming up on Media Week, our review of the free-to-air TV ratings year.